I've been getting so many requests on YouTube to do an update on OSCR Health stock. The stock is down 28% over the last month. It's been really, really bad. But it's not just OSCR, it's also United Health, which is another one of my losers. Year to date, Centene is down 54%, Humana is down 12%, ELV is down like 25% year to date. And healthcare in general, and especially the insurance stocks, they're having their 2008 to 2009 moment. All of them are breaking down, some of them even before earnings. And it's mainly because the market is expecting really bad earning reports from those companies, and that's why those stocks are going down. And today, OSCR has reported some preliminary numbers of their report, and as you would have expected, they're really not good at all. And they're much worse than I personally expected, but the market was expecting that. And this is why the stock was down 28 or 30%. And that's why the analysts, they were downgrading it, because they were looking at other insurance companies reporting earnings. They looked at OSCR. They're like, there's no way OSCR is going to hit those medical loss ratios. They have to increase them a little bit. And this is exactly what happened. And, the stock has surprisingly reacted positively to what happened today on those news. And I'm going to tell you how, and I'm going to tell you why that normally happens, and let you know my upside potential and the thesis in general. But in terms of the numbers, they were really terrible in my opinion. Medical loss ratio, it's now 86 to 87% for full year 2025. Based on the last guidance, which was just in February, that's a few months ago, it was expected to be 80 to 81%. So it jumped from 80% to 87% in just a few months. This is insane. So this is a mismanagement issue from OSCR Health's part. They were too optimistic, and normally you would not trust such management team. But the problem in this situation is they're not alone. Every single health insurance company has fallen into the same exact trap, and are all facing much higher medical loss ratio than they would have originally expected. So it's not just an OSCR Health problem. If it was just OSCR Health and UNH and everyone else was doing well, I would say I wouldn't even touch the stock, because I would not trust the management team in issuing some kind of a realistic guidance that they can actually reach. But in this case, it's not just OSCR. It's every single insurance company in the United States. So it's really, really bad. In terms of loss from operations, they expect to lose 300 million to 200 million. The prior guidance was positive 225 to 275. Now it's going to be a loss of 300. So from positive 275 to a loss of 300. Again, this is a massive, massive difference. The only positive thing about this report is probably revenues. Revenue is going to be around 12 billion, and it was expected to be like 11.2 billion. So that's, something a little bit positive, but all the numbers were really, really bad. But again, the market expected that, and that's why the stock was going down. Now, looking at their guidance, they were actually expecting to reach a target medical loss ratio of 80% in 2027. I'm not sure how that's going to happen anymore. If right now in 2025 they're sitting at 87%, how is it going to reach 80% by 2027? I highly, highly doubt that's actually going to happen. Now, if we look at what the management actually said, and this is very interesting, they said utilization rate by OSCR's members remained elevated in the second quarter of 2025. However, cost trends moderated as compared to the first quarter of 2025. So things are actually improving into the second quarter. But the revised guidance assumes the reset company's utilization patterns persist for the remainder of 2025. So they're saying that Q2 is a little bit better than Q1. They're seeing some improvements. But in their guidance, they're assuming that Q1, which was pretty much the worst quarter, is going to be the standard for the entirety of 2025. So in other words, they're pretty much lowballing guidance. This is likely going to be the lowest kind of worst case scenario guidance that's going to happen. And I believe they have a very high chance of exceeding those numbers. So now the company has finally set low expectations. And once the company sets low expectations, the stock has adjusted to those low expectations, even though they're not good. but they were not as good as the market was expecting. This is why the stock kind of reacted positively on this news. And this is something that I said on X. I said, remember, the lower the stock goes, the less risky it becomes, as long as the underlying problems are temporary and not permanent. Based on what we're seeing with OSCR, what we're seeing with United Health, the higher loss ratios, they're likely temporary, they're unlikely to be permanent, which means that this is, a temporary problem, and 2026, 2027, 2028 will likely be much, much better for those companies. And I also said stocks don't bottom on good news. They bottom on bad news when no one is expecting them to. If you think about your favorite companies, maybe a company like Tesla. Tesla has bottomed whenever they missed on deliveries like that. They never missed before. And everyone was expecting the stock to crash, but the stock bottomed and it went up like 80, 90% after that. This is because Tesla was going down in anticipation of bad deliveries. It got priced in. The stock bottoms on bad news when it's not obvious, when no one is expecting it to, and it starts moving as the market is forward looking, and it will start looking for something better than whatever happened in the past. And I believe there's a very high likelihood where OSCR has likely priced in the worst case scenario, and the market from here is going to start looking forward to some improvements instead of looking at the bad news, because the bad news has likely been priced in, and OSCR stock should likely move forward in anticipation of the bad news that's eventually going to come over the next few quarters. And I think it's prudent to wait for the next conference call and hear what the management says before coming up with a conclusion that you were wrong, because I saw many people today, they panic sold, they were calling OSCR a mistake, they were just making bad decisions. And normally on such days, it's a very bad day to be making such decisions. It's best to wait and especially listen to the earnings call from the management team, Q&A, and get a feeling of what they're seeing for 2026. Is it really within their control? And just get a feeling of the overall situation in general before panic selling or panic buying or whatever you do on such days. Normally, it's an emotional decision. Now, based on their guidance, I highly doubt they will be able to reach the $2.25 that they had put up in the last quarter. And this is the number that I used for my analysis. And this analysis will likely end up being wrong. I mean, after everything I've seen so far, how everything is worse than expected, I don't know how they're going to reach 225. But even if they reach $1.50, okay, just a very simple example. If they reach $1.50 instead of 225, and if the company trades at 20 times earnings, and this is something else people tell me, why would they trade at 20 times? UNH barely traded at 20 times at its peak. Well, this is because OSCR is growing like 15-20% in revenues. So for the revenue growth, they deserve a higher multiple. So if they trade at 20 times earnings, that would be a $30 stock. The current stock price is $14. So even if OSCR was able to reach $1.50 instead of $2.25, the stock could still potentially double over the next year and a half, 2 years. So I still see a lot of upside on OSCR. I believe the worst has likely been priced in. I highly doubt things are going to get worse than what they have gotten. And I'm liking the company very much, and I'm seeing a great potential, but it's best to wait for the management's earnings call and hear what they have to say, some kind of guidance, get a feeling on the situation before making a decision that you're wrong or that we did something bad and like we're the worst investors ever and all these kind of things. So it's best to wait and let the stock play out and let the management do their thing and see what happens. But for me, I think this is a classic setup where they posted the low end, like they put up all the bad news first, and from here it's likely going to be positive news, which should help the performance of the stock, and it's going to help shareholders in general. So that's just my update on OSCR. Very simple, very easy. I wish I had the full report. It would have been much easier to do a deep dive again, but this is what I have, and that's what I wanted to say. So I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.